The macroeconomic factors, as I showed, are still fantastic for Germany, and the turnovers in the shopping centers seem to be stable as well. The consumption, with such a low unemployment rate, people have a job, they have money, they can spend money. It's not like in the US where you give everything away. We try to save money as well, but the returns are stable in the shopping centers. So what we see in the centers is the vacancy of the shops is quite low, which is the basis for a good turnover and a base for good yields. What we miss are the opportunities. As I said before in the presentation, we are quite restrictive in Germany with the permits for shopping centers because they still seem to destroy inner city locations, shopping locations, and therefore we won't see too many new shopping centers. But the existing ones which deliver good returns, they are in the focus of the investors, and we have international investors, we just spoke about it, who just tell you as an advisor, okay, I'm interested in these 10 shopping centers, I will buy them if you can deliver.
At Henderson in Germany, we manage virtually all sectors of the retail market, so we have outlet malls, shopping centers, retail warehousing, high street. And similar to the comments made by Matthias, there's a lot of demand, both domestic and international, for across the spectrum. The biggest problem is accessing the stock. If you look at the outlet sector, it's basically development driven. Shopping centres, you've got two big players, ECE and now Unibail-Rodamco. ECE have 180 shopping centres. Okay, some aren't in Germany, but a big chunk of the market. So it's very, very difficult getting your hands on the right kit. We've focused our efforts in the retail warehouse sector, where it has been a little easier to access the stock, but we've done that with German domestic money, looking at food-anchored retail warehousing. And we'd love to get into the high street sector a little bit more. We've had demand from particularly Dutch investors, but it's just very, very difficult. A lot of the stock is tied up with local investors, and you've got to get in with those local investors in order to deliver that stock. So yes, I can see that demand will continue, and it's all about being able to deliver the stock, so you've got to be there on the ground.
And do you see within that, looking at the sort of secondary sections, are there shopping centres that maybe are available but need extra work in terms of asset management or renovation, or are there those kinds of opportunities? If there's an issue with stock in general, which is presumably in the more core kind of shopping centres, the more core areas, are there opportunities there, or are you not, or do you think they're too risky?
No, there are opportunities, but you have to make sure that whatever centre you're looking at is dominant within its particular catchment, and with certain types of capital, you're not going to go down to a really small level, but I believe if you can find a big dominant shopping centre which is perhaps a bit aged, needs refurbishing, that's where the opportunity is. But unfortunately, the spread between prime and that level of shopping centre, is coming in all the time, and sooner or later that will get squeezed out too. So, but if I had money today, that's where I'd target it, because if you've got the right platform, you can deliver good returns.